Hello, good morning, everyone, and sorry for the delay. There was some net issue at my end. It's raining heavy over here, so there was some net issue. But anyways, let's get started without wasting much time. Uh, Let me quickly share my screen. Share screen. So, yeah. Please, can anyone confirm in the chat if they are able to see my screen? Can you please confirm in the chat? Just mention yes. So okay, great. Thanks for the confirmation. So let's get started then. So Nifty, you know, today it is now finally attempting to break above the 40-hour exponential average. In fact, even in the morning, it closed above it. It opened above it, but it witnessed selling pressure. So we have finally seen some signs of, it breaking above the 40-hour exponential average. In fact, what interesting thing happened in the past couple of days is that, and I had briefly mentioned about it, which was the mid cap 100, small cap 100. Okay, both were actually very strong, but today what has happened is that they tested the early band and now they are trying to revive from there. In fact, if you see the RMI also, it had not gone back to the zero line, it just missed over there. So typically, what we feel is that once it goes back to the zero line and then it turns around, that is a good enough sign that enough consolidation is done, a consolidation or correction, whatever it may be. And after that, it would be ready to move higher once we get the crossover. So, this part is done now. What we'll wait for is a crossover. In fact, even if you see the small cap index over there, also it was very resilient. So, let me also open small cap. Okay, this is the small cap index. So over there also, it was just hovering around the 20. Yesterday, it broke below that, and then it has also tested its band. Now the good part is that the bands are very narrow. Ideally, if we see some turnaround from there, and then eventually a breakout, then this should be a good enough indication that whatever consolidation has to happen has happened, and maybe things should start looking up. So on these two front, these were the only two indices where the RMI had not gone back towards the zero line, so that has done. So this gives us some comfort, and the good part is that the Nifty index is now starting to outperform. Basically, in the past 2-3 days it has stopped falling, so that is the good part. Now, in terms of levels, what we would watch out for, as I told you, first level is nothing but this previous high, that is 25,255, and the other one is the Fibonacci retracement level, which is around, yeah, somewhere around here, basically 25,370 or so. If we do the exact number, it comes to around 25,370. So these are the two levels to watch out for on the upside. Okay. One more thing that I would be watching very closely, which I've highlighted as well, but it's the Bank Nifty index. Even in the Bank Nifty index, if you see, it has been for trading in a channel. So far, it has, it attempted to break above the channel, but it couldn't. So if you see over here, okay. So this was a channel which the Bank Nifty is in, and it tried to break above that, but it could not. Now let's see. It has taken support at the 20-hour average. So let's see if this time it finally breaks out or no. But for Bank Nifty also, there is a very important resistance over here. So this high is 57,363 and 57,270, right? So this is the zone that it needs to clear. Once that happens, the setup is very good, because on the daily chart, if you see, it has taken support at the bands on the 40-hour, and typically this is a very good setup. All we need is now a confirmation of price action. If it breaks from this resistance zone, even this will help the RMI also to give a bullish crossover. So let's see. I mean, in that front, I'm very hopeful. And also, we have discussed in length about what the sentiment indicators are doing. One indicator, which I had recently started to highlight was the PCR. Okay, that has also now finally touched the 0.71 mark. Earlier, it was around 0.75 or so, and it was falling down. So now this has also confirmed in reaching its lower end of the band. So let's see. I mean, the setup over here looks encouraging. Now there are few things, or few places where I have started to see some cracks. So say for example, when I look at RRG, okay, I did the indices, right? So in the indices, it is the Nifty reality which is now starting to turn around a bit on the downside, and this may not necessarily be a good sign, because see, things turning around from improving to weakening would mean something of this sort can happen, which means that the correction was there. After that, in the pullback, basically, when the pullback happens, it leads to the index coming back to the improving. And if it has to resume the downside, then it will start turning around, and the reality will keep coming down and even get back to the lagging quadrant. So we need to watch very carefully over here what reality does, because it is now turning around from improving. So let me just check the chart as well for reality. Okay, so see, something very similar is happening, which I mentioned over here. Okay, basically, if this low breaks on the downside, then it may not necessarily be a good setup. In fact, let me just check the setup over here as well on the RMI setup. Sorry, there is some net issue today at my end. Okay, so you can see what is happening over here. The 40-day was holding, it attempted to break out, but now it is on the verge of closing below the 40-day exponential average. Okay, if that happens along with a bearish crossover, that may not necessarily be a good sign, and in fact it will start indicating that maybe a deeper correction could be in play. So that's where you need to be careful. And also, this is confirmed by RRG also, where sort of the momentum is also lagging right over here. So we need to be careful in these two counts, right? Wait, only indices. Yeah. So this is where we need to be careful. The next thing that while I was checking, I mean, see, today also we are not seeing much activity as such. But when I saw the total market and I saw the volume buzzers over there, in fact, not volume buzzers, yeah, it was actually the volume buzzer. So that's where one more stock that came on my radar. Basically, this is Godrej Agro, and that is also into FMCG. So in our earlier discussions, I had mentioned that FMCG, cement, metal, these are all sectors that are sort of looking up. So that's where I mean, this setup caught my eye, because over here what is happening is that there was this multiple resistance which had, and now it is trying to break above that. So it would be worth keeping on radar. uh, to be very honest, this stock has been sort of a laggard, and it has tested a lot of patience. I have tracked it earlier as well. It has really tested a lot of patience. But the long term setup is actually very good, because when you do something like this, basically what has happened is that there was a breakout, and then there was a consolidation above the breakout level, right? So need to see how and what it does. It would be great if it eventually breaks above the high. The high is, I think, almost around 876 or so. So that's where it will get into the all-time high zone, and that is what it will make it an interesting setup to watch out for. Uh, so this was there, and I think more than that, there are no major observations. I mean, what I am just watching out for is, basically when the FIIs, stop shorting, because even yesterday where we saw some bit of correction, they further went ahead and shorted more. Okay. So what is happening is that in the pullbacks they are not cutting, and even in the minor correction that we see, they end up shorting. Okay. Now because their shorting is so high, it has resulted even in percentage of long going down to now 14%. Okay. In the past, we have seen it going down to as low as 7-8% as well. So whether they go shorting to that extent or no, that we need to see. And also the other thing is that we are heading very close to the expiry, right? In 4 to 5 trading sessions, we'll be having the expiry. So need to see how they position themselves also after expiry. So next few days are going to be interesting. But as I have been repeatedly mentioning this earlier, such sort of shortings eventually resolve on the upside. Okay, now why does that upside happen? Could it be trade deal? Could it be good uh, global market mood or so on? I don't know. But frankly, if you see even the global markets, they are not that bad, right? In fact, Hang Seng has just made a new high. I just saw this. So Hang Seng has actually made all those new heights. So amid all this, trade deals, and US putting sanctions on China and so on. I mean, there the markets are actually very good. So I have made a global market list as well over there. I was checking Shanghai as well, which is this. Okay, and you can see that in the last few days it's on a roll. And in general, the trend of the equities across the globe is also good. So I'm assuming that if that is the case, I'm not sure why they are so bearish or so, but let's see. I mean, we have to deal in terms of levels. At this point of time, this low is extremely important, because we discussed the importance of that, right? I mean, it is nothing but your 61.8% retracement of the previous fall, and the 40-day and all these were coinciding at these levels. So if this low breaks, then maybe we'll have to think that FIs are right. And I don't know, then even their short positions can probably go till this zone or so. But if this level is held and we end up breaking those resistance level which I mentioned, 25 to 55 and the 61.8% retracement, all these happen, then I think they will be forced to cover, because they will realize that they are on the wrong side. And that can lead to some good short covering as well. So I think that's all I have for today, because I mean, I am not seeing much you know observations today, so I can actually spend more time in resolving any of your queries that you have. Let me try and take some questions. Waiting for Nifty, Bank Nifty breakout. Yes, even I am doing that. Reality has gained momentum since last week. So, Rahul, you're right that the reality had gained momentum, but the issue is that now it is, trying to turn around. I mean, especially on the RRG chart, as I showed you. So there it is trying to turn around, and that's where this is a problem. Now, someone will say that okay, FMCG is also doing that. So I won't deny that. I mean, this is also happening, right? But as I told you, the setup for FMCG, why I am a little more convinced about that, is because when you see the FMCG setup on the monthly chart and all, it is very good. Okay, so see the monthly chart and you'll understand. So it has taken support at the 40 month. In the past, we have this data almost for last 10, 12 years ka, to at least we have the 40 month, right? So over there, each time when it has come over there, it has tried to turn around. So the other thing that I had mentioned specifically was that we need to see breakout from this inverse HNS. Okay, right now it is struggling over here, but my guess is that sooner or later that should happen. That is also because on the RRG, if you say see the weekly, okay, FMCG is now trying to turn around from lagging. I mean, this would be at a very nascent stage right now. What we want to see is more relative strength also, which means moving, towards rightward, because on the x-axis we have RS ratio, right? So if it starts moving a little more northward, it would be interesting. So all we're trying to do is that trying to bet a little early, looking at the setup. But what gives me a little more confidence is the higher time frame chart, right? So let's see how this space behaves and evolve. It's an ongoing thing that we'll monitor. But there are some interesting setups that are also developing in FMCG, which I had showed you, I think 2 or 3 sessions back. So let's see how this evolves. Let's see. So Sanju, you're right. I think it's because of Loda and also because of Oberoi, I think. But the sector is getting affected. I mean, the chart is getting affected. So I'll be a little careful. FII selling is causing too much pain. Yes, that's true. Let's see. What about Nifty? I think I did mention about Nifty, Rahul. Uh, Jane Street is back, right? Even though DIs have more share in our market, FI still have so much weightage. They do, Rahul, because see, what we are looking at is some peculiar trends, right? I'll show. See, if you see the sentiment data, I am not just focusing only on FIs, but I have typically seen that once there the turnaround happens, uh, it normally is a good enough turnaround. But even if you see the client positioning, okay, they are also important, and at major bottoms they are extremely long. Okay, so say for example something like this, right? They are long. Their longs are extreme. Something like this, their longs are extreme. Election day, this, they so typically, what we have seen is that FIIs and clients are almost opposite. Okay, and where and when both of their positions come to an extreme, that's where the chances of reversal gets much higher. Okay, the only thing that I mentioned, that see, these are all indicators that this gives you an early sign that of a turnaround can happen. But as we know in the market, everyone says bhau bhagwan hai. So that's why we need a confirmation on the price action. Once that happens, all these indicators will eventually fall in place, and they will do their job nicely eventually. But all we right now have to do is that wait for a turnaround. So breaking above the previous high of 25 to 55, at least that would be the starting point to think of turnaround, especially on the daily chart. On hourly chart, the turnaround seems to have already happened because the 40R is broken. So yeah, and in fact, just to give you a context, even DII's positioning is at a all time. I mean, they did record buying, especially when the markets were correcting, right? I mean, they haven't been so long ever. We have this data since 2012 or so. They haven't been so long ever. In fact, this was also before the tax break, which happened in 2019, right? Even then, they were extremely long. Over here, also, they were extremely long. At this bottom also they were extremely long, and now at this bottom also they are extremely long. It's only when their positioning comes to net short of around say 20 to 40,000 or so, that's where we need to be worried of a top happening. Say for example somewhere over here there was a risk of the top because they were shorting. Okay, over here also the top occurred. Over here top occurred, right? So at this point of time, they are optimistic and they are thinking that maybe the correction has happened way too much. Maybe it is not visible on index level, but stocks have seen some good amount of beating, and that's why they're more or less bullish, on the bullish side, right? uh, so all these indicators when I'm seeing, I mean, be it FII's positioning, which hints towards extreme pessimism. Uh, DIIs, which historically shows that if they are net buyer and their net buying, comes to around 26,000 to 43,000 range, that's where that is actually bullish for the market from a medium to long term perspective, right? And even the short term indicators say like OIPCR, which means this suggests that more people are comfortable shorting the call, and that is why the OIPCR is falling fast. So when we see a turnaround from here, this is a 9 MA average that we take, right? So when this average starts turning around, you would end up seeing optimism returning back to the market. The only missing part is, I mean, typically I have seen that once these readings are oversold, at that point of time, even the diffusion indicator ka readings are oversold, which means percentage of stock about 100, I mean, 20 SMA, 50 SMA, they all come towards the bottom end of the range, which is not happening so far. And that is where, some bit of confusion lies that are we going to bottom out from here only, or do we see a more correction till maybe this zone and then we turn around? Okay, that is where we want to see a clear price action reversal, and that price action reversal will help us negate this possibility of a further correction, right? So that's how we are poised at this point of time. And it is not just that I give a lot of importance to FI positioning, but more or less they are almost connected, because end of the day participant positioning is a zero sum game, right? Some are buying, some are shorting, and but eventually they have certain patterns, and those patterns are now pointing out towards a good medium term bottom at some point of time. So we'll have to be a little more patient and see how this data evolves. Yes, actually, FMCG breakout did not happen. It is still sitting. I mean, it was sitting at the fence, and that breakout did not happen. What about? So no, I don't track Karachi market and all. I just track this market just to see what the broader trend is. Okay. Uh, Auto analysis on auto. Actually, auto is also looking good. I had seen actually M&M in the 52-week high list, I think. Yes. So this was over here. So M&M we had discussed a couple of days back, based on the OI insights also, that see this was the resistance zone for M&M. Okay, now it is trying to break above that resistance zone. Not there, not fully there yet, but it is trying to break out. And if you see the auto index, I think it is CNX auto. So here also what you see is some sort of consolidation taking place. Wait, let me just make it a bigger screen. So the consolidation is happening. CNX auto. Okay. So Mahindra in that sense is sort of leading on the up move, right? So yahan pe what you can see is that there is this nice consolidation that has happened after a big move, and that consolidation, in my view, should end up breaking out on the upside sooner or later. Okay, because it has held the averages pretty well. So need to see when that happens. I think once that happens, I think by that time even M&M might end up confirming the breakout on the upside. So we are having some interesting time, and in fact over here also we can sort of look at it as an inverse HNS pattern which is developing, where right shoulder is not very deep, but a good structure is being formed. So let's see. I mean, auto also looks very interesting on the chart. The only thing is that it is yet to break out on the upside. Why is VIX at the lowest point? uh, the reason is that there is no volatility at all. We are just stuck in a range, grinding down slowly. So that is the only thing. I mean, I don't know. Usually, such low levels are not sustainable. uh, Volatility should pick up, and typically volatility picks up when market also corrects. So I don't know how this is going to get resolved. Whether the market rises higher and that leads to spike in volatility. Usually that does not happen, but we need to see. But when we see the price action, Nifty I feel that Nifty has made a very good bottom at 24,882 or whatever that low was. Ideally that should not break. If that breaks, then maybe we can also end up seeing some shoot up in IVs as well, and maybe the diffusion indicator, which have still not gone to oversold zone, that might end up going. But that is the view only if the low breaks. As of now, that is not something that I'm anticipating at this point of time. So let's see. I think so. There was not, much honestly to uh, discuss today. So there is one interesting question from Hari. Show RRG is showing stop, but the prices are falling. Can you explain? So Hari, good question. I think we have explained this in depth also in our webinars. But I'll just give you a brief gist about this. RRG ka full form is relative rotation graph, right? So everything that you're seeing is relative to the benchmark, which means if the index is falling 5%, right? If the stock is falling 2%, it has relatively outperformed the benchmark index, right? So everything that you see is relative. Okay. It I mean, if the RRG is going up or the momentum is picking up and so on, it does not necessarily means absolute market return. Okay, it just tells you that they are doing much better than the benchmark index, and that's why you are seeing those kind of pattern. Where momentum and RS is rising. So you need to keep in mind the real use of RRG is when you feel that the market has bottomed out. Okay, then you might want to be with the sectors that are showing signs of a turnaround or that are in leading quadrant, or they are trying to turn around from the weakening quadrant. Those are a very good setup. So say for example something like Bank Nifty. I think I had discussed this as well. uh, you can see that Bank Nifty, it is now trying to turn around, right? And somewhere I do get a feeling that eventually Nifty should also pick up. So that's where focusing on sectors like FMCG, where momentum is picking, pharma, consumer durable, where we are seeing momentum also pick up and so on. I mean, those things might end up performing better. So that is what the sense we get from RRG just looking by the chart. Okay, that is the value add that RRG gives, but it does not assure you like an absolute return. Okay, it is all relative. So please keep that in mind. The other question is that current market is like pre 19 selected index heavyweight moves. Yeah, you can say that. Maybe the breath is not very good, but we had a very good breath. Basically, when we were seeing the move after all those trade war and all. I mean, in this phase, the breath was very good. After I think 12th of May and so on, that's where the breath has started to get a little narrow, and I would agree that the bread is not necessarily that great. But that's where I think eventually when there is a broad based participation that happens, even when FI starts covering shorts and so on, it might end up becoming a little broad based market. So let's see how it behaves. So I think I've covered all the questions, and it's almost 11:40. And sorry for the delay today. There was something that was not in my control. But yes, we'll try to be more regular and start sharp at 11. So thanks a lot, and let's catch up tomorrow with some. Hopefully, we get some interesting trends ahead. Okay, thanks a lot.